Good afternoon, everyone. Welcome to today's Charity Village webinar. We will get started in just a moment. We just want to make sure that everyone has a chance to join us before we begin the session. We have people joining us from across the country today, which is excellent. It's so nice to have all of you here. And with that, we will go ahead and get started. Welcome everyone to today's Charity Village webinar. My name is Mercedes and I'm the Marketing and Communications Specialist with Charity Village. As we are gathering here on a virtual platform, it is important to acknowledge that each of us is joining this webinar from the ancestral or unceded lands of the Inuit, Métis, and First Nation people. As a settler on this land, I'd like to acknowledge that I'm speaking to you from the traditional, ancestral, and unceded territory of the Anishinaabe, which includes the Ojibwe of Fort William First Nation. For those who may be joining a Charity Village webinar for the first time, Charity Village is Canada's largest online job board for the nonprofit sector. In addition to our online job board, organizations can also post volunteer positions. So if you're looking for work or to recruit talent in the sector, Charity Village is a great place to start. We also have a ton of excellent resources for nonprofit professionals, including online courses, articles, fundraising tools, and free webinars like the one we are presenting today. Before we start today's webinar, I would like to quickly run through some housekeeping items. You may have noticed when you joined the webinar that you were automatically put on mute. Since we have hundreds of participants in today's session, it is important for us to minimize the amount of background noise so that everyone can clearly hear the presentation. But you can still ask questions and make comments using the question box at the bottom of the Zoom control panel. Look for that at the bottom of your screen. We will be taking questions at the end of the webinar, so please submit your questions as you think of them, and we will do our best to get to as many as possible. You can also email your questions to webinars@charityvillage.com. If you happen to encounter any technical issues with the webinar, whether with viewing the presentation or with the audio, please let us know in the question box or by sending us an email. We will do our best to get any technical difficulties resolved as quickly as possible, but in a worst case scenario, please remember that we are recording today's webinar and we will send you the full recording by email tomorrow. So if you get called away or disconnected, you will still be able to view the full presentation. And with that, I would like to welcome our presenter for today, Omar Vizram, the founder and head of growth for Ankle. Welcome, Omar.
Thank you so much for having me. It is always great to be here with our partners at Charity Village. Hard to believe that we're already coming up to the end of 2024 and starting to think about 2025. The topic that we will cover today is preparing your nonprofit's finances for 2025, a roadmap to success. Now, before I move forward, just a quick housekeeping item. We may not have time for all of your questions today, but please do include your email address with your question so that we can reach out to you later. Now let's get going. So in terms of what we will cover today, my hope is that we will be able to leave you with 5 key strategies to help you really navigate what's to come in 2025 from an accounting and back office perspective. So first of all, we'll look at strategies to unlock unrestricted revenue opportunities. Secondly, we'll talk about how to manage flow-through agreements, something that we are seeing more and more of here at Ankle. Third, we will talk about conducting a proactive cost review to optimize for 2025. Fourth, we will talk about strategies to strengthen funder relationships with transparent, data-driven reports. And finally, we will talk about strategies for modernizing your financial operations with new technology, which of course is a subject that we are very close to here at Ankle. All right, let's get going. So a little bit about Ankle, and many of you may know us by now, but I am the co-founder of Ankle. I started Ankle in 2016, really with a simple problem in mind. And that problem is that you can't build a great organization without good books. Fast forward to today, while the scope of what we offer has increased, we remain very committed to delivering high-quality monthly reporting to our clients. Today, we have 300 clients across Canada. 100 of which are not-for-profit organizations, including many member-based associations and charities, a pretty broad scope in the not-for-profit sector. We offer financial operations support, which is bookkeeping, payroll, and more, and financial management support, including CFO advisory and controllership services. Now, before proceeding, I would like to stop and acknowledge that our offices at Ankle are situated on the unceded traditional territories of the Musqueam, Squamish, and Tsleil-Waututh nations. A little bit about me. I am a chartered professional accountant with about 15 years of experience. I got my CPA while working at KPMG, where I specialized in assurance services and tax services. I also spent some time working for BC's Auto Club, BCAA, in an operational capacity. Recently at Ankle, I moved into the role of head of growth, and I get to work with many of our clients as they begin their journey with Ankle to transform their financial operations. We will share our contact information with you. Please do feel free to reach out if you'd like to speak to us about our services. Now let's jump into our first strategy for today, the strategy of increasing your unrestricted revenue. Now, the reason this is important is that we run into situations where we find a lot of our clients with insufficient unrestricted revenues. And so I really want to give you some opportunity to think about what you might be able to do here to prepare yourself, particularly for 2025. But first, a polling question. How confident are you on a scale of 1 to 5 that your revenues for the next fiscal year will meet or exceed this year's level? 1 being not very confident and 5 being very confident. Let's see what you have to say. We'll just give everybody some time to respond here. All right, some preliminary results here. So actually, we have most of our respondents, so 36% at a 3. That's where we saw really the most, 102 out of 285. 5% are, sorry, 7% are very confident, and 15% are not very confident. So somewhat evenly distributed, but most people falling at about the 3 mark. So let's see if we can help you improve that today. All right. So increasing unrestricted revenues. As I mentioned, we come across many organizations that are well-funded, have a lot of cash, but lack unrestricted revenue. Now, the reason that this is important is that unrestricted revenue is really what you use to manage your administrative costs on an ongoing basis. You may have restricted funding that you have to use for specific programs, but without sufficient unrestricted funding, you can't run your operations. Now, Q4, of course, we are in Q4 now, is the perfect time to think about unrestricted revenues. Many of you will have opportunities, particularly with Giving Tuesday just around the corner, and that's December 3rd, by the way, to raise donations. December is the busiest month of giving for the year. But it may be too late to do anything significant for this year. I would encourage you, though, be an ambassador for your organization, promote it on social media, rally your teams to see how much you can raise in the way of unrestricted donations this November and December. Also, as you think about 2025, think about social initiatives. Professional development and galas can be a great source of unrestricted funding. And also, there are grants out there like provincial gaming grants that can be of significant help. But what I would like you to really consider is that unrestricted revenues are critical for your operations. Some key steps that you might want to undertake: check your books to review your funding sources. Really make sure you have a clear picture of what your funding looks like, how much is restricted, how much is unrestricted, and then use that as you're planning your budget for 2025. Plan and execute a well-structured campaign aimed at bolstering unrestricted funds. And like I said, we're in Q4, we're at the end of the year. This is the time of year when you can maximize donations. Do absolutely everything you can in order to do so. Now moving along to our next strategy, strategy number 2 of reducing the risk of flow-through agreements. Interestingly, through our clients at Ankle, we are seeing a number of these arrangements. And so we think that there is a growing trend towards them. And so what we hope to do today is equip you with some basic understanding and tools on these flow-through agreements. Let's dive in. So first of all, you might be asking, what are flow-through agreements? And flow-through agreements typically arise when a funder wants to support a nonprofit organization that isn't a registered charity. These agreements often involve using a registered charity as a conduit for both cash and in-kind contributions to channel funding to the NPO. As I mentioned, we're seeing a growing trend of the use of flow-through agreements, especially prevalent when NPOs lack charitable status but aim to access donor or grant funding. Now, it's important to remember that flow-through agreements can bring significant complexity and compliance risk. For one, the Canada Revenue Agency requires charities to retain direction and control over how funds are used. And if a charity acts merely as a pass-through or conduit without fulfilling its obligations, it risks losing its registered charity status. CRA does not permit conduit relationships. We have a few key steps here that I would like you to consider. One, approach flow-through agreements cautiously. Make sure you understand the risks and get the necessary advice to understand them thoroughly. This is a point where you definitely want to engage your legal counsel to review the agreement. And turn down situations that may put you offside with laws and regulations, of course, but more subtly, situations that are incongruent with the mission of your organization. Now let's move to our third strategy for today, conducting a thorough cost review for 2025. Now, any one of you on the call that have ever been in a monthly financial statement debrief with me or any kind of strategic planning meeting with me will know that this is an area that I really like to focus. It's particularly important to stop and reflect on this as you begin another fiscal year. Now, before we get into this section, let's get into another very exciting polling question. When was the last time your organization did a cost review? Never. We review costs every year. We haven't reviewed costs in 2 years, or we haven't reviewed costs in more than 3 years. I'm really interested to see what you all have to say. Let's just give you a few seconds to respond here. Okay. We have almost 300 responses here. So 12% of you said never. 75% of you said we review costs every year. That actually exceeds my expectation. That's pretty good. 9% are saying we haven't reviewed costs in over 2 years, and 5% are saying we haven't reviewed costs in more than 3 years. Thank you for your responses there. That's great. let's jump in here. So, conducting a thorough cost review for 2025. This is an area where many organizations fail to assess their cost structure annually, leading to inefficiencies in their spending. A strategic cost review can highlight opportunities for savings and operational improvements and also provide a clear picture of your financials for 2025. Let's get into some of the details here. So it's important that you make this an organization-wide initiative. Don't do this in isolation. What I strongly suggest you do is that you pull a profit and loss from your accounting system, look at each expense item, and assign an owner to it. From there, engage that owner in understanding the expenses in detail. So dive deep into the transactions for the year. Look at your largest operating expenses. Look at contracts that are due for renewal. Look at your biggest cost buckets. Look at opportunities to consolidate, automate, or contain costs going into 2025. This is one of my favorites. What we've seen over the last couple of years is really a consolidation of functionality in various software as a service tools. As an example, Microsoft or Google Suite today will do a lot more than it did, say, a couple of years ago. At the beginning of the pandemic, for instance, many of us were buying Zoom licenses because Zoom was so much better than Google Meet. But Google Meet actually functions very effectively. So could you potentially do away with a tool like Zoom? DocuSign, for instance, you might want to look at tools where you're paying by seat. Are you paying for too many seats? Take DocuSign as an example. If you have one too many seats at $40 a month, that's potentially $500 a month that you are incurring there that you don't need to be incurring. So really focus on those recurring costs. These are the costs that go through your credit card every month on an automated basis. It's important to take stock and really look at these once a year. Now, if you have assigned budget owners to each line on your profit and loss, use that as an opportunity to build an improved budget for 2025. And as much as possible, use real-time financial data to track and adjust cost-saving measures throughout the year. So I was speaking to a group of executive directors last week, and as you're building your budget for next year, really make sure that you are going deep into that budgeting process. Build it at a granular level on a month-by-month basis. The more specific, the more granular you can be here, the more you will be able to really track the results on an ongoing basis. So this is an activity, the expense management, the expense review activity, where I would suggest that you go really deep. It will help you and it will go hand in hand with your budgeting process for the next fiscal year. All right, let's go into our fourth strategy today, engaging funders early to secure 2025 support. Now, it's important that you keep in mind that your funders do need constant engagement. Like your clients in any organization, you want to make sure that you're maintaining strong relationships with your funders and that you have good line of sight as to any potential challenges or risks to your funding. So let's dive in here. As the political and economic environments shift, proactive communication with funders is critical. I feel that I've said this many times, many years. I don't know that over the past 4 or 5 years, there hasn't been a year where we've had uncertainty. But as we've seen the last couple of months, really the political environment has changed significantly. That can have a significant impact on your ability to maintain inflows from your funders. So early engagement is critical and ensures continued alignment with your mission and helps you ensure that you will secure financial commitments. let's get into a little bit more detail here. So I would strongly suggest scheduling conversations with key funders before year end. Understand the concerns that they may have. Ask them very directly if they can confirm their ongoing support. And make it your goal to understand their position. What is important to each funder? And does your mission and vision align with theirs? What are their organizational risks? Share key data. Go into these meetings prepared. Have clear, transparent financial reports. Have good quality financials with budget versus actual results. And share your plans and how you plan to continue to have an impact on your members. Use these conversations to really deepen and strengthen your relationships with your funders. And really stay on top of funder reporting. If this is an area where you have been delinquent, be open and be clear about what your funders about what you plan to do differently next year. All right, let's go into our fifth strategy for today, auditing and optimizing your financial operations. But first, our third and final polling question for today. Would you say your accounting function is optimized? Yes, we use effective technology and have strong processes. Maybe we're doing fairly well, but there's room for improvement. Or no, this is an area where we need to improve. Really interested to see your comments here. Let's give everybody a minute or so. All right, we have some results. Over 300 people responded. 20% said, yes, we use effective technology and have strong processes. 57%, so most of you said maybe we're doing fairly well, but there's room for improvement. And 23% said no, this is an area where we need to improve. And in response to that, what I will say is this is an area that really is a journey. When I started Ankle about 8 years ago, most organizations that I was speaking to were not on the cloud. Today, most that I speak to are on the cloud using tools like QuickBooks Online. Now there are opportunities to implement technologies that will make your operations more efficient. So it's a journey. Just continue to have an open mind and look for opportunities to improve. But let's jump in here and get into a little bit more detail. Many nonprofits have outdated or inefficient financial operations set up. Automating workflows and migrating to more efficient tools can save time and reduce costs. Now, the reason that we often see this, the reason we see that many nonprofits are still doing things the way that they're doing is ultimately that they don't have the opportunity to give this some attention. But I would strongly suggest if you do have a little bit of a lull in the holiday season, really think about those inefficient processes. Where are your administrative staff spending a lot of their time? Keep in mind that QuickBooks Online today has 2,000 integrated apps. I believe it's even more than that now in its ecosystem. There surely are people that have experienced the pains that you're experiencing currently, and there are, in many cases, tools that you can use to improve your processes. And just remember that year end is really the perfect time to assess and improve your financial systems. If you're considering making a change, for instance, let's say you're not on QuickBooks Online, you're using something like Sage Desktop, starting a new fiscal year in a new financial system is really the best time to make a change. Or if you're moving to a new payroll system, starting at the beginning of a calendar year is always best because there's no need to migrate historical data. So this is a really great time to be diving into this. let's get into some more details and key steps here. So evaluate your current accounting system and really ask yourself, what is slowing you down? Is there an opportunity, for instance, to implement an expense management tool to use optical character recognition to automate some of the data entry around receipts and expenses? This is a place where there have been a lot of advances in technologies in recent years. Also ask yourself what reports and data is missing or hard to find. Interestingly, the reporting capabilities of a lot of cloud accounting tools has improved dramatically. And you might be surprised at what you can generate today, the custom reports you can create today. And so think about those pieces of information that are hard to find, those reports that are maybe manual. Can you figure out a way to do them on an automated basis? Not-for-profits specifically should consider switching to QuickBooks Online if they haven't already. We have developed some strong workflows and reporting templates within QuickBooks Online. I rarely meet an organization that has less than $10 million in annual operating budget where QuickBooks Online is not a fit. Third, identify and eliminate manual processes by integrating AI and automating into your back office workflows. So again, coming back to those expense management tools, many of them today will learn your coding patterns and automatically apply those coding patterns to transactions to minimize human involvement. It can also be, using tools like ChatGPT, perhaps. Think about what you can do to really automate workflows, to leverage AI for the benefit of your organization. And if you haven't already, please go fully paperless. There are really great workflows around capturing documents, capturing receipts in an automated way. It can avoid the need to store significant amounts of paper. If you are able to make your year-end audit process fully paperless, you will make the lives of your auditors much easier, and that should hopefully translate into some savings for you. And finally, work with your financial team to ensure a smooth transition to new systems. Definitely take the time to consider the implications of implementing a new system. Bring in whoever your finance professional is to understand what the implications might be and to get their support as you migrate to these new systems. Wow, we made it. We are at the Q&A portion of this session. Really excited to take your questions today and to provide more insights where I can. Again, I'll say we may not have time for all of your questions. So if you've provided an email address, we will do our very best to get back to you. If you continue to have questions as we go through, please continue to include your email address. All right, Mercedes.
Thank you very much, Omar. So the first question, are there key things the board should be doing at the end of the calendar year to prepare for 2025?
Yes, I would say that this is a time when the board should really work with the management team and provide or challenge, what finance looks like today and what can be done differently for next year. Really encourage a thorough process of expense review, I would say. Ask the management team, what they're doing to manage costs. You may even want to collaboratively set a goal for cost cutting. And when you really encourage the management team to engage broader stakeholders in the organization, you can see some really fantastic results.
Thank you, Omar. So the next question, while granular reviews are helpful, can you discuss the importance of managing the big expense areas for nonprofit budgets?
Yeah, so the big expense areas are often the ones that we think are sort of a foregone conclusion and we just, ignore them. But that's a place where you really want to take stock because ultimately any savings or adjustment there can have a significant, relatively greater impact on your annual operating budget. So what I would say more than anything is sort of a general statement is don't take anything for granted. Go through every account in detail.
Thank you, Omar. So the next question, going back to the funding portion of the webinar, in regards to funders, are you referring to privatized funders or government bodies as well?
Both actually.
Okay, thank you. That's good to know. And then as we approach 2025, how should nonprofits adapt their financial strategies to ensure long-term sustainability beyond next year?
Yeah, that's a really great question. And I would say that this really, it's important to, you know, even in the best of times and the worst of times, to maintain lean operations. Lean operations that are efficient. We did a webinar, I think it was the last one we did with Charity Village, or maybe it was 2 webinars ago, where we had our client, Dorinda So from Point A, join us and share some data on the savings that they had in bringing us in and really rethinking their finance operations. So I would say look at all of your administrative functions, finance and accounting being one, HR being another. Are there more efficient, effective ways of doing things? Outsourcing can be a really great option. Bringing in a third party that really is a specialist in the area um, that that they would be focusing on. So finance, accounting, HR, again, those are great candidates. But I would say that just overall maintaining a culture of keeping your operations very lean is important. And the great thing about the work that all of you do is that the people working in your organization are really committed to the mission of the organization. If you share the big picture, why are we reducing costs or really focusing on cost reduction in certain areas? I'm confident that you'll be able to rally your teams and get some really great results.
Thank you, Omar. So the next question, do you have any tips on what we should look for in a financial software program? We're thinking about moving to something new as our existing system seems to have inefficiencies.
So if you are talking about an accounting system, I would say, as I said towards the end of the presentation today, that QuickBooks is very likely a tool if you are sub 10 million that is going to work just fine. So don't disqualify it, but also look at, like, for instance, many organizations are very heavy on billing activities, let's say, and you need an integrated payment workflow with your billing activities. There are applications, very specific applications that solve problems that you can look at to integrate into QuickBooks to really give you an optimized workflow. So I would say really think about applications that you can use to be efficient. Make sure the application has been tested, test it yourself, get a demo, but really look towards keeping your technology stack lean. The other thing that I want to raise here is that a lot of organizations look at ERPs too soon. And ERPs come at a significant cost. They are um, many times more expensive than QuickBooks. The other thing that organizations often don't consider is the overhead associated with managing these systems on an ongoing basis and the overhead associated with implementing these systems. I've actually seen over the years many situations on the not-for-profit side and the for-profit side where organizations actually buy an ERP and then move to something simpler just because of that ongoing overhead. So really think critically about what you are implementing, what you want to do, what you want to achieve, and ultimately why some of these off-the-shelf products that are really easy to get up and running with, why they won't work for your organization if you're considering something bigger.
Great, thank you, Omar. And can you recommend a resource to prepare a compliant flow-through agreement?
To come to, sorry, what was the question there?
Can you recommend a resource to prepare a compliant flow-through agreement?
Okay, so no, I don't have a resource here, and we are seeing so much customization in this that I'd strongly suggest engaging a lawyer on this, particularly a lawyer with knowledge and experience in the not-for-profit sector. I can't say that I have any one resource that I can point you to that would be useful for purposes of developing one.
Okay, thank you, Omar. And then if an organization wanted to establish an operating reserve, how should that be calculated?
Oh, this is a good one. And actually, I was just as I mentioned earlier, I was speaking to a group of not-for-profit leaders last week. Um, if I have to give you a number, and I really don't like giving you a number, I'd say you want to have 3 months operating budget as a reserve. But the reality is organizations are so different that you should really look at specific circumstances. For instance, how seasonal is your organization? How much risk is there to your funders? Are you confident, not confident, very confident that funding will be renewed year over year? There are a lot of variables here. So it isn't, well, it is a quantitative assessment from the standpoint of what are your ongoing operating expenses? What do you need in order to keep the lights on? But there is a lot of qualitative discussion that has to happen here. And I would strongly suggest that this is a place where senior management and the board should engage on this.
Okay, thank you very much. And then how do we balance budget cuts when receipts or donation targets are not achieved?
That's a really tough one. And again, there's probably more specifics to your organization that I would need to know in order to provide any kind of meaningful insight here. Um, it's a tough one, though. Really, all I can say here, my only suggestion is to really go deep into your costs. Every time we do this with clients, we always find opportunities for improvement. For instance, the whole concept of seats, like when you buy technology with a certain number of seats, do you have seats that you don't need, right? It's little things, but it's also little things that go a long way.
Perfect, thank you. And then what is the general rule in terms of percentage increases in preparing an annual budget?
Ooh, okay. So most organizations, or sorry, I should say most, many organizations will just take an inflationary number. So look at inflation, CPI numbers to help you assess what cost increases you are expecting. But I would strongly encourage that you go deeper into it. Look at what you expect, every expense to increase by. Inflation is, I mean, it's an average number, right? If your organization, for instance, is very people heavy, which most organizations are, I mean, what you expect your salary costs to be in the next fiscal year is an important consideration. That's going to have a significant impact on the budget. We know that in recent years, salary costs have changed at rates that have not tracked with inflation. Sometimes they've been higher, sometimes they've been lower. And you want to look at each role, each position, each individual, and forecast based on what you expect their salary to be going forward. So I would say it's not so much about what number to use, it's how deep you go. Go deep and do this at a very at basically an individual cost basis. Of course, there will be a bucket of expenses where there just isn't a whole lot of value in going to each specific item. And in those cases, just apply an inflationary number.
Okay, thank you. And then as a nonprofit waiting on charitable status, what advice do you have to help access our case for flow through funding from a registered charity? So how do you help them build up their case?
There's a lot of nuance to this, and I'd say it's very case specific, but you need to avoid the situation, the whole conduit situation that we talked about earlier. Because in the case of a conduit situation, even if the money is flowing through a registered charity, ultimately, those funds won't be eligible for the favorable tax treatment that they would otherwise have. The CRA will deny them. We do also believe that this is an area where the CRA is going to be focusing. So I would say just really have clarity on what the transactions look like and really seek professional assistance here.
Thank you. And then we have another question. What exactly is included in a cost review?
Um, that's a good question, and it can mean different things to different people. The way I view a cost review truly is you open QuickBooks or whatever accounting system you're in, and you go line by line, you drill into the general ledger, and you look at every single expense. Um, that I think is you look at every expense and you discuss it with the person who owns it in your organization. I can't remember if I said this as we were going through the slides, but assigning a cost owner to each account, have that owner there and really ask them in each specific expense what those expenses relate to, how you're being invoiced for those costs. And so it really is an exercise of rolling up your sleeves and just diving into your financial statements.
Thank you. Okay, so the next question regarding best practices, how do you assess your financial processes?
Um, so I'm not sure that I totally understand the question, but ultimately you want to approach processes from a few different dimensions. One, of course, is efficiency, but the second one is control and segregation of duties. So I would say that if you have a treasurer with finance experience, that is a good place to go for some insight. But really, you want to consider, yeah, controls, segregation of duties, as well as overall efficiency.
Okay, thank you very much. And then 2025 looks like it will bring economic uncertainty. Any tips to deal with that generally or within budgets in particular?
Um, I would say that think innovatively. If I could leave you with one thought, it would be status quo, may not be the approach to take right now. One, how can you increase unrestricted revenues? Are there activities that you can, or social enterprise, for instance, we've seen a lot of organizations start to think about some form of social enterprise to complement their ongoing operations. And then the other is look at diversifying your funding sources. Um, you know, if you just continue to rely on what you've had in the past, you may be in for a negative surprise, but there's also an opportunity to look for new funding sources. So really be innovative in your approach to how you plan going forward, I would say.
Thank you. And this individual is asking, should I be preparing for our annual audit now? Any tips for getting prepared for that, if so?
Oh, yes. So this is one where we've actually done a number of webinars in the past. And I don't know when your year end is. Most of the organizations online today are probably either a December year end or a March year end. Those are the two most common year ends in the not-for-profit sector. Yes, definitely start planning. What I would say is if your bookkeeping is not up to date, get it up to date. Start engaging with your auditors as well. Audit processes continue to evolve and continue to change. Ask them for their overall audit approach. Ask them if you can get those listings of documents that that they need in order to conduct the audit. Get that as soon as you can. Yes, absolutely. Make sure that you start thinking about your audit sooner rather than later, I would say.
Thank you. And then we have another situational question. So this
Okay.
individual is asking, we have an ongoing push and pull between our board and auditor on whether to profile surplus unrestricted funds as reserve funds or as unrestricted net assets. Can you help us to understand the difference between those two and which one is preferable in your opinion?
I would say again, this is very context specific, so I can't really provide a specific answer here. So unfortunately, I don't think that I can provide insight there. If you want to get in touch with us, happy to have a conversation about this offline.
Amazing, thank you. And if everyone could please provide their email address with their questions, or even if you haven't provided your email address and you've already asked some questions, you can still pop it in the Q&A box, and that will expressly consent that you have provided Angle the opportunity to reach out to you. So we'll be able to attribute your email address to your past questions. So please feel free to go and pop your email address in there now. And the next question, given the current economic climate and challenges in the sector, what are your thoughts on zero-based budgeting?
Zero-based budgeting is, it's the general approach that is in favor, I would say. But it's not necessarily always the right approach. Maybe there are specific initiatives or specific years where you will plan for that to look otherwise, either, small surplus, small deficit. You don't want to run a significant surplus over a long period of time, and you also don't want to run a significant deficit for obvious reasons. So I would say that it's, again, I know I've said this a lot today, it's context specific, but there may be reasons not to run at a zero-based budget.
Great, thank
I'll just add to that a little bit if you don't mind. This is definitely an area where you want to engage the treasurer, the board in planning discussions as you start thinking about this.
Perfect, thank you. And then we've had a few more questions about budgeting. So any best practices for budgeting?
Yeah, and again, we have a fair bit of content in our ankle library, but also in sessions that we've done with Charity Village in the past. So please do refer to those. But a couple for sure. So one is budgeting at the financial statement level. So this may not help you for the previous year, but make sure that your budget is prepared at the reporting level inside of your accounting system so that you can easily generate budget versus actual results on a monthly basis. And I would say that the budgeting process is one where, and I did say this earlier, again, go as granular as you can. Don't just take expenses. We spent $100,000 on office expenses last year and divide it by 12. Really look at the seasonality, the fluctuations of your organization, and prepare your budget on a month-by-month basis. And again, the more that you can collaborate with your team, the more owners you can bring into this, the budget really does become more of a strategic planning tool than it is just an exercise to make sure that we're financially viable.
Great, thank you, Omar. And the next question, what should be the ideal percentage of payroll costs to the overall budget for a nonprofit organization? So I think this can just be broad-based.
Yeah, this is again a really tough one because it's context specific. And truth be told, I see wild swings. I see organizations that are 80% salary. I see organizations that are 30% salary. It really depends on your organization. There is no right or wrong answer here per se. Of course, you shouldn't be wasteful. You want to be able to demonstrate, stewardship with funds that you've been entrusted with, but I wouldn't say that there's a clear answer here.
Thank you. Okay, and then we have another question as well. This individual noted that they are a small organization without a lot of extra bandwidth. Are there any best practices that you could share for how to make the accounting function more effective?
Yeah. Um, Really, if you implement basic tools like QuickBooks, Dext is one that we use quite frequently, Pluto for payments, and also run your financial processes on a routine. So I find a lot of people they're in QuickBooks quite regularly. If this is a smaller organization, you're probably wearing a lot of hats. Just do bookkeeping and just approach finance related activities at specific times. So put it in your calendar, block small increments of time to get it done, and use really great tools. I would also say, though, just because you're a smaller organization doesn't mean that reconciliations aren't important. You want to be reconciling the bank regularly, like I would say monthly or at the least on a quarterly basis. Don't just rely on, your year-end workflow to manage your books.
Thank you, Omar. So we are coming to the end of the Q&A session. Thank you very much for presenting such an informative webinar. Do you happen to have any final comments before we sign off today?
We covered a pretty broad array of topics today, and I really hope that this helps you prepare for 25 and, it gets you thinking about your finance and accounting function for 2025. We've included a couple of resources here, and Charity Village will make these available to you, so you don't have to write down these links here. But a couple of downloadable pieces of content, one on budgeting specifically, and there were some questions on budgeting. This is a great one to download, sort of a 101 on budgeting, the do's and don'ts. And then the second one here is an NPO's guide to working with Ankle, what it looks and feels like to be a partner with Ankle. And in there, we've included some best practices. So please feel free to download these resources. Again, we would love to have a conversation with you about how we can support your financial operations and financial management in 2025. Please do reach out to us. And again, we will share our contact details with you.
Wonderful. Thank you very much, Omar. And those guides are also included in the chat section right now. If people would like to go and access them there, they will also be included in tomorrow's follow-up email. And I just wanted to remind everyone that you will receive that follow-up email tomorrow with a link to the webinar recording and the associated resources. Please feel free to share this link with your colleagues. The email will also include a survey link that you can fill out with your feedback on today's webinar. You should see a survey link pop up right here in Zoom following the session as well. On behalf of Charity Village, thank you so much for joining us today. I hope you'll join us for our next free webinar, Secrets of Successful Nonprofit Leadership, Leveraging Data to Tell the Story of Your Mission. You can find more information on this and all of our upcoming webinars at charityvillage.com/webinars. Thanks again for joining us. I hope that you enjoy the rest of your day.